Justin, we have had the FOMC interest rate decision and Jerome Powell's press conference. Bitcoin and markets are moving buoyantly to the upside. We're going to break down exactly what happened, what was shared in this meeting, and why is it we're seeing markets here on Bitcoin running back up to the 23,500 level, up 1% after initially being in the red leading up to the meeting. Similarly, we've got altcoins rocketing, Phantom up as much as 5%, Optimism up 15%, Render up 15%. Markets are buoyant after getting our 25 basis point rate hike. Smash the likes. Don't forget to subscribe if you appreciate this content. Thank you for those of you who joined us in the live stream. If you want to watch it minute by minute, including the press conference, then I'll link that up for you guys to go watch. But the key summary is we got the 25 basis points. Jerome Powell said he expects ongoing increases. Yes, ongoing increases was the verbiage he used, which is interesting. But speaking to previous Fed officials, they said that he would use that terminology even if he only thinks there's one. Because remember, markets had priced in the exact 25 base point for this meeting, and going ahead to the March meeting, markets had priced in another 25 basis points, followed by a pause in May, okay? They thought that maybe he'll come back later in the year and then do some cuts. So pausing from May to the back end of the year and maybe seeing some rate cuts to the back end of this year. Now, interestingly, that is where we kind of differ, because what the Fed said is there could be multiple more rate hikes, but markets aren't believing it too much. They've added that wording in probably because they don't want to give away their hand, because if they just said one more ongoing increase, then you've basically given your game plan away. So a lot of people are saying they had to do that just to share that. He said he wants to continue to reduce the size of the balance sheet. Okay, so he spoke about the balance sheet. And then we spent a lot of time talking about the labor markets. And this is the bit I need everybody to understand, because I've been speaking about this a lot leading up to this particular FOMC meeting, that the focus is going to switch this year from CPI to the labor market tightness. Earlier today, we had the JOLTS figure come in extremely hot. I'm going to show that to you guys so you can see exactly what happened here with the JOLTS figure. But the JOLTS figure came in at 11 million versus 10.25 expected. So there's still too many job openings versus the demand. The supply and the demand are not at one-to-one parity, and Jerome Powell is seeking that balance. We also had the ADP private jobs figure come in at 106,000 versus the 190,000. This is actually positive. This is what Jerome Powell wants, showing that payroll growth is slowing. The rate of pay growth as well, I delved into the report so you guys didn't have to do that, has also stayed flat at the 7.3%. So yes, it's still high. 7.3% pay growth is still high, but it stayed flat in January. And that's what we're looking at. We're focusing on this rate of change. Now we switch our focus to Friday, right? Don't forget, tomorrow we got huge earnings as well. You got Microsoft, you got Google, you got 11% of the whole QQQ, the Nasdaq. Okay, Amazon, Google, Microsoft, all having earnings tomorrow. You then on Friday have your non-farm payrolls, the important labor market figure. This can also move the markets, expecting this to come in at 185 versus the previous 223,000 jobs created. We will be looking out for that, and we'll be looking at the wage growth within the report. We'll do that together, so don't worry about that on Friday. But for now, it's good news. We did get the rate hike we were expecting. We spoke about the summary of economic projections, and this is what they did. They increased from to 4.5 to 4 3/4. Good news. And then he says anticipates ongoing increases. So this is the verbiage they're using, even though they may only do one more rate hike. So how did the markets respond? Well, initially, when we got the initial announcement, you can see here, markets were okay. They expected 25 basis points. You saw a bunch of traders swing the price up and then swing the price down here on Bitcoin. Expected. It was the first time I've ever seen that 99% of the market were dead set on seeing 25 basis points. That was risky, but thankfully, Jerome Powell did the right thing, did 25 basis points. He didn't rug markets. He also didn't allow them to rocket by doing a pause at this meeting. Then we saw it cool off a little bit, getting scared going into Jerome Powell's press conference. At the 1/2 Jerome Powell started speaking, and immediately we started rocketing. He started admitting the fact. First, he started off a little bit hawkish in his statement, but then when the press conference came in, he was quite positive. I was quite impressed. So he did keep his foot firmly on the necks of the markets. He did say the things we expected. We got plenty to do. Core inflation is still high. PCE is still high. Fine. The labor market is not in balance. Great. But he did say financial conditions have loosened, and it's gratifying. That was his word. He said it's gratifying to see that the disinflationary process has started, but the labor markets haven't suffered as a consequence. This is really good. He also said a few things such as if economy performs, don't expect to see a 2023 rate cut, which is interesting because a lot of the market had initially priced in a rate cut towards the back end of the year. Will that frustrate markets a little bit? potentially. He says he wants more accumulated evidence of inflation slowing down, because remember, he says, I want to see clear conviction around inflation coming down. And what does that mean? Is that 2 months coming down, 3 months coming down? Because the reality is, if you look at the inflation rate now, it is coming down, right? We are seeing it. We're not imagining this. We're not making it up. We're not just getting greedy. We can see it coming down. Yes, some of this can be entrenched, and we don't know how much of that is, but the market's starting to feel confident that this will come down just because we've managed to crack the back of inflation. Guys, quick story. So the other day, I got a message from one of my team members, and it turned out he got caught up in a phishing attack. Yes, these phishing attacks are getting more and more sophisticated, whereby the attackers are able to pretend they are a senior person in a company and request payment from somebody else. On top of that, I got another email from one of our IT guys who said I need to change all my passwords because they've been leaked on the dark web. This is a complete pain, and that is why today I'm proud to partner with Aura. Aura is an easy to use app which gives you everything you need to stay safe online. Aura protects you from scammers and hackers by scanning the dark web, where criminals sell stolen information, looking for your emails, your passwords, and your social security numbers. It then alerts you fast if it finds anything. Aura also gives you near real-time alerts on suspicious credit inquiries, like if someone was opening a loan or a credit agreement in your name. Their built-in VPN also allows you to stay anonymous online by keeping your browsing history and personal information safe and encrypted. Aura even helps you manage what your kids can do on their devices as well, so you can restrict specific apps, set screen time limits, and you can even set focus times to ensure your children are doing their homework instead of binging on my videos on YouTube. And not to forget, their password manager also lets you store and access all your passwords in one place. Now here's the thing, maybe you've got an app or two that does some of these things. The beauty with Aura, and what I specifically like about it, is that they've managed to bundle all of these into one place. So you just need Aura and it'll take care of all your online phishing, scamming, and VPN needs. So let Aura do the hard work of keeping you safe online, and we've got a 14-day free trial for you and up to 60% off on the subscriptions. Definitely head over to my link, ijaz.uk/Aura to take advantage of that. And let's get straight back into the video. Jerome Powell was also asked about if he's considered pausing. He sidestepped that question. It was a very good question, but he said, look, we've discussed the path ahead at depth, but he didn't give us any clues as to when we could expect that pause. But he did say the labor market has to come in line, and that you can tell that is the focus. So we've got to look to this non-farm payroll here on the weekend. Let's take a quick look at the key levels in the charts that we need to be wary of, because you can see Bitcoin is trying to break out from this channel. Be very, very careful, guys. If we do not manage to push this higher high, then we're going to collapse back into the channel. So if we get a retest of the top of the channel, that's fine. That could be a potential entry if you have a bounce with good volume. But right here where it's hanging, just be very, very careful. Now that Jerome Powell's finished speaking, you could see this start to cool down as markets start to digest the report a little bit. Let's take a look at Phantom, up 4%. This is a huge break, guys. This has played out exactly, and my trade on this one is printing. Ka-ching! We spoke yesterday when this was running. I said, do not chase the green candles, wait for the retest. It retested. I entered my trade, and now we've broken past this peak, which is really good. So if we can get some positive green candles from Bitcoin, expect this to continue, but we are heading into that 58 cents region, which is some resistance on Phantom. So that one doing really, really well. Some other tokens worthy of notice. Render is rocketing up 14% here. Beautiful uptrend. Look at that beautiful uptrend there on Render. Lovely move here. But again, do not chase green candles. If you want to add, wait for pullbacks. Look at Optimism. Optimism, layer 2 solution. I made a video on layer 2s. If you haven't watched it, go check it out. I'll link that up. This is a narrative I care about in 2023, and I give my reasons for why. Also, let's take a look at the dollar index suffering down 1%. Brilliant. This is exactly what we want. We need the dollar index to continue to remain in its bucket. So a nice big red candlestick here for the dollar index, showing us that risk can slowly rotate back to the on side. So here's the thing, guys. It's clear that we are making progress towards battling inflation. We can't sit here and deny that. Even Jerome Powell, who doesn't want the markets to run, haphazardly, he doesn't want them to prematurely loosen. He said that specifically, but he's got to admit, we're not silly. We can see the data is improving and giving us an improving trend. Yes, there's a bit to do on the labor market. Yes, we've really got to get inflation a little bit down, a couple more points, but we are seeing progress in the right direction. We can start to plan for a pause. Maybe one more 25 base point rate hike, maybe a pause thereafter, but either way, we're much closer to the end than we are to the beginning of this tightening cycle. And all that to say, why are we sitting on the sidelines panicking? There are so many people that have been so punished by the bear market in 2022 that they've just not taken part in any of this move. They're sitting there convinced that this is going to get thrown back down to the 15,000, 10,000, some people shouting 8,000 mark. And whichever influencers or people who are telling you this without supporting data, what are they basing it on? You've got to understand, why did Bitcoin get to 15,500 last year? Why? It was a concoction of everything from macro policies to foreign stuff going on, geopolitical issues, right? Russia, Ukraine, China issues. On top of that, you had inflation out of control last year, tightening of policy with fears, with 75 basis points after 75 basis points. On top of that, FTX, Celsius, Terra Luna. What a horrible time. Now, things are showing some green shoots. We can't deny it. We've got to be data-led. Otherwise, we're just going to be sitting on the sidelines on our hands doing nothing and watching the price pump. Now, with that said, exercise some cautions. There are still risks on the table. Russia, Ukraine has not disappeared. There could be bad earnings by companies. There could be worries with GDP reports. The non-farm payrolls on Friday could be a nightmare. Things could get worse. Inflation could be entrenched and Jerome Powell may have to increase interest rates again. These are all things that are still ahead of us. But when you're seeing an improving trend, we can't just sit here and deny and just not try to invest in the market. Then there's no point being in the market. So there you have it, guys. A positive reading, 25 basis points as the market expected. But more importantly, the press conference from Jerome Powell. If you want to watch it, go watch it. I will timestamp it on the hour live stream, which we did. Definitely go over there. Give that a watch as well. If you appreciate this type of short, timely updates, smash some likes. Don't forget to subscribe. Let me know, how are you trading this market? Check out this video here, and I'll see you in the next one.